Welcome back. I decided to finish up the last video and throw it in here for you in case some of you wanted to get ahead a little bit. And we can finish this up on Wednesday, and you guys will have a couple days to work on the mastery, and maybe I'll throw the study guide in there as well. So let's take a look at the statement of cost of goods manufactured. This isn't too bad. It's what we refer to as plug and jug a little bit. So this will be kind of fun. It won't be difficult at all. We're just going to throw a statement out there to those who are interested in what it costs to manufacture the goods in the month of April. All right, so we're going to pull a lot of the information from what's given to us in the book, and I screenshot this here. So we're just going to pull that from, and we'll just type it in. Okay, so direct materials that were used in this production is coming from here, $268,300. So let's just type that in, $268,300. Okay, then we've got our direct labor, and that is $95,120. There we go. And then we have factory overhead applied, $122,600. And then we're going to add these up. Just a simple sum formula. These three, enter. All right, so a total cost of work placed in process is $486,020. All right, so then we've got our work in process inventory, and we're also going to grab that from there as well. So work in process inventory, April 1st, that is actually finished goods beginning inventory, 63,000. No, it's not. No, it's not. It's right here, work in process beginning inventory, $63,250. All right, so let's type that in, 63,250. All right, and then we're going to add these up. So what I did is I put in this kind of peach color where we're going to be adding. So these are totals. So we'll put a little equal sign in there. We're going to add up the 486 plus the $63,250, and we've got $549,270 total cost of work in process during the month. All right, so then we're going to take the less work in process inventory at the end of the month, April 30th, and that is where less work in process at the end should be 61,720. 61,720. Then we've got the cost of goods manufactured. So we have to subtract that out. It's going to be equals 549 minus the 61,720, and we get a total cost of goods manufactured. Okay, so I'm going to save that. And I'm going to move this guy up here. And we're going to go to the second one. This is a partial income statement. So we're going to be looking at partial balance sheet and also partial income statement in regard to manufacturing. Usually we typically look at big income statements and include everything, but we're not going to. We're just going to look at the part where our production has affected income statement. So again, the information is right over here given to us, and I also duplicated it under here for the balance sheet. So this is simply just grabbing information from what is given to us. All right, so to figure out cost of goods sold, we have to take our finished goods inventory amount and place it in this box. So we're just going to type in that amount. That amount is over here, finished goods beginning inventory. So that's what we have ready for sale, right? $63,540. Okay, then we're going to grab the cost of goods manufactured, which we just figured out, and there's a little note there to tell you that too. Equals, and we're going to grab that cost of goods manufactured, the 487. There we go. Look at us, we're rocking and rolling. And then we're going to add those babies up. 63. plus the 487 gives us a total in peach of 551,090. All right, then we're going to subtract out the finished goods inventory that's left April 30th, 2019. So what amount is that? I'll let you guess or figure it out. It's over here somewhere around there. 59,520. I'm sorry. Yes, 59,420. And the gray means that we're subtracting out to get cost of goods sold. So we're going to take the 551 and subtract out what's left over. That is our cost of goods sold because that's left over. We haven't sold that yet, but we have sold this, and this is what it cost to make that. All right, so then we're going to take our applied overhead. So that applied overhead right here, that is 2,100, but it's going to be put into the sheet as a negative, and you guys all know how to do that, right? We'll see if this works. Yes, it does. All right, so $2,100, but it's a negative, so it comes out of it. We subtract it out, and then we get net cost of goods sold. And then that is going to go over here. So we can simply do a plus the applied overhead because that has to be indicated as a negative because it is a negative. It's not a positive number. It's taking away from our total profit. And so then we've got gross profit on operations. We're going to subtract out our sales less our cost of goods sold gives us gross margin or gross profit. So equals the 712 minus 489.70. Bingo. 222,888. That's our answer right there. So let's make that a little yellow. And there we go. Okay. Then you can also do your percent of net sales. You know how to do this. Or this is ratios. This is what accounting one's figuring out now. I'm not sure they're loving it, but and then we simply do another formula, right? The 489 divided by sales to get a percent of what it's costing us. So 69% of our profits go to making our product. And we can do the same thing with our profit. Everything goes back to sales, 31. So these total would be 100. All right, last one, you guys, in this chapter, and there's only 3 that we have to cell reference. Everything else is given to you. So just, we always, when we do our our balance sheet, we always look at cash, petty cash, accounts receivable. So those are, from our work in prior months and years, actually. So we're going to pull in the materials. So finished materials is going to be over here, materials ending inventory. So that looks like it is 32,000. No, I'm not going to put an equal sign. I'm just going to put $32,690. So that's materials in our ending inventory. That's what we have left. So that's what we have to state in our balance sheet, what's left. Then we've got work in progress. And that is indicated right down here, work in progress for ending inventory. This is goods that are not quite finished yet. And I keep saying work in progress. It's work in process. Thank you. $61,720. And then for the last one, we've got finished goods. So we've got our raw materials. We've got our products that are a work in process. And then we've got our finished goods. So the 3 categories we're going to place in here. And that number is $59,420. All right. Okay, let me go down a little bit. All right, so now what we're going to do is we're going to add up all these, and then we're going to get our total. So it's going to be equals sum. We're going to add these up, enter, and we get $311,783 for our partial balance sheet. What we don't have here is our liabilities and our owner's equity. So that would complete our balance sheet. We don't have that yet, but if we did, it would match that because assets equal liabilities plus owner's equity. And we are skipping, and I know you're all going to be very sad about this, we're skipping 17.4. We're not going to do variances with you. That's pretty high level. And so we made a collective decision at North and Central that we weren't going to be doing that as of yet. So we're going to put that on hold, and we're just going to the 17.3. And then you guys you'll be completing the mastery. All right, that's it, folks. Chapter 17, done all online. All right, so you have some reading to do. I'd like you to go over this to correspond with your reading and your learning, and then try out the mastery on your own. Thanks, everyone. Bye.